Hey guys, welcome back to the channel. Today I'm going to be talking about how the bear market trend is starting to weaken and this indicator is beginning to suggest we might have a low in place. So if you're new to the channel and you want to show some support, please do consider leaving a like and subscribing. So we have this indicator down here. This is the MACD. This blue line is the MACD line, and basically what this is the difference between the 26 EMA and the 12 EMA, and then this orange line is the 9 EMA of the MACD. So overall it's a bit confusing, but for the sake of this video I'm just going to be referring to these lines as respectively the blue and the orange line. In general, this is a great indicator for identifying momentum shifts in the market. So this goes both ways for both bull and bear. In general, it's showing us the relative strength or weakness of a trend and how that momentum is starting to shift. So in general, when the blue line is starting to cross back above the orange line, that is a bullish sign that the bear market trend is beginning to weaken and we might be entering this neutral territory. So let's go back to the prior bear markets and really look at these moving averages and understand what this represents. So we had a cross on the MACD back in the week of February 23rd, 2015, and this corresponded to approximately, if I take a measure move, 6 weeks after the bottom was in. So we had this bottom formed in January of 2015. We started to enter this sideways accumulation zone, really building up this base for the next bull run. And then 6 weeks later, we had the MACD confirm that we had a cross, and basically this bear market trend had weakened and we entered this neutral territory. So it identified that we had this strength of the bear market really start to weaken. We entered the sideways consolidation phase, and then from there we led into the next bull run. So if we go back to 2018, we can see how in this bear market we had the bottom on the week of December 10th in 2018, and basically the MACD didn't cross until about 8 weeks later. So again, it is a little bit delayed, but I think in the grand scheme of things, it really doesn't make a difference, right? We were still in the general same consolidation region, this sideways neutral territory, where the MACD crossed in February at a little bit higher, but still at a great region to accumulate. So the blue line crossed back above the orange. We saw this MACD cross, and yet again, this was a confirmation that the bear market trend had weakened, and we start to shift momentum from bearish into this neutral zone, this accumulation zone, building into the next bull run. So the reason I'm talking about this is because we have a potential cross coming up here in just a few weeks. So if we zoom in, we can see the blue line is starting to slope upwards. It's rounding off, and we have the orange line continuing to decline. So we will be seeing, if I just take a trend line of these current rate of changes, we are going to be seeing a cross in a few weeks, and it's going to be towards the beginning of August. Now, when we do get this cross, historically, it has signaled that the bear market low is already in by about 6 to 8 weeks. So let's say we cross hypothetically on the week of July 25th. This is just for argument's sake. Let's say we cross next week. That would mean that 6 weeks ago we had the low in place. Now, obviously we could have a retest of this later on, but from a multi-year approach, I do believe that we are going to be starting to enter a sideways consolidation region. So similar to the prior bear markets, after we had this bear market trend end, that didn't mean we were going to pump back up to new all-time highs. It didn't mean the trend had immediately shifted from bear to bull. It meant that we went from this bearish trend, the momentum died down, and we entered this sideways consolidation phase before shifting from neutral back into bullish. So I think we're going to be seeing a similar thing here, where the bear market trend has been a majority of the way through, and I think that we're going to be entering this sideways region with the MACD confirming that the trend has really started to shift back into the neutral territory. Now, another caveat to this indicator is that not only is it delayed, but we can see fake outs. And if we go back to March, we can obviously see that the MACD did cross back above, and this did signal a bullish sign. Now, this was a fake out because the blue line came back below the orange, and basically it confirmed that, this was a fake out. We didn't really have much going on here. The trend was still dominantly down, and there wasn't really much to get excited about. And the thing about this is that we have basically had a fake out every single bear market, and we've had exactly one fake out, and the actual cross that marked the bear market bottom was the next cross after this fake out. So if we see, obviously we had this fake out in March. Let's go back to the prior bear markets, and just see how we had similar fake outs, right? We had this fake out in September of 2018. The blue line crossed back above the orange. It's a little bit hard to see. It barely crossed it, but it still did. And it still was this kind of failed move back above. So we had a fake out in the bear market of 2018. And then we had another one a little bit more severe here in June of 2014. And I think the point here is that these fake outs were pretty close to the all-time high in terms of price and time. So, we obviously had this fake out a little bit closer to the all-time high. We weren't that deep into the bear market, so I think it was a little bit more obvious. And today, seeing how we're down 70% deep into the bear market, I think this is not going to be a fake out. I think this is going to be an actual signal that the momentum of this bear market has started to weaken, and whether we are starting to consolidate for a few months or even a few years, I do consider that the low has a possibility of already being in. Now, that doesn't mean that we don't have to retest it. We could obviously have, the consolidation phase, and then later on towards the end of 2022, a retest, right? We could have something like this. And actually, this was something similar to 2015. If we go back, we had a retest, right? We had this low here in January of 2015, and then a retest in August. So we could be seeing a similar thing. Again, ultimately, I think it doesn't matter that much. When taking a multi-year approach, I think this region around $20,000 to $22,000 is going to be looked back upon as a phenomenal region to accumulate. And I do personally think that, a few years out, I do believe that, we're going to be into a new bull run. We're going to be seeing new all-time highs within the next 5 years. And I think that this is going to be looked back upon as a phenomenal region to accumulate for the long term. So I hope you guys did enjoy this analysis with the MACD. If you have any comments, suggestions, or feedback, please do leave those below. And as always, I will see you in the next one.